Hello traders everywhere, Adam Hewison here, coming to you from the digital studios of MarketClub with your midday market report for Monday the 24th of June. Everyone wanted to buy a dip in this market, so where are the buyers? Suddenly everything's evaporated and there are no buyers around. We're down very dramatically in the major indices and some of the major stocks, but there is a winner today, and I want to share with that one winner with you to see your impression of what you should do with the stock. We're also going to be looking at gold and also crude oil and also the dollar. So let's get started right away with today's report. We'll go to our portfolio manager and we're looking at the Dow. Here's the Dow. Here's a big down day today. We're looking at a 6-month chart. We'll scoop that into 3 months. And you can see when we put our weekly trade triangles in here, boom, we had a warning on the 5th of June that things weren't right in this market. And that's 500 points ago. So I think the reality is you really want to pay attention to these trade triangles, as they're very, very important in terms of timing. And if you look right now, we are on the lowest end of the scale, meaning we're very oversold, meaning we can still go lower, but we're very, very oversold. What's interesting to me is we're getting very close to these previous lows here, and these could act as support. Potentially Tuesday could be a turnaround day, but remember, don't try to pick bottoms. Bottom picking is not a successful method of buying stocks. Wait till the stock market turns around and our weekly trade triangle turns green, then be a buyer. Then the odds are in your favor. So let's go to our next market. That's going to be the S&P 500 cash. Much the same picture there. I think we're pretty much done here on the downside. I don't think we're going to see it much further, but as I said, don't try to catch a falling knife. NASDAQ under pressure. Apple's under a lot of pressure, down 3.5%, which is the most I think I've seen Apple go down in one day recently anyway. And I still think we are going to turn the corner in these markets because the longer term trend right here, the monthly trade triangle, is still positive. And providing that stays positive, I have to look at the odds are in our favor that the market's going to eventually go back up. But once that turns red, and it will eventually, then you want to jump out of this market really quickly, because that will be a major bear market on our hands. So let's move along. Looking at the gold market, this is a daily chart of gold. And if you have not seen our gold video, I highly recommend that you take a look at the gold video, because that has proven to be very, very accurate. And we are making a killing in gold this year. We've been on the short side of the market. As you can see, all of our trade triangles are still red, and you can see the prices we got short at. It's almost $100 the last trade we had. You can see all of these trades in our World Cup portfolio. And we're on target now to maybe even have a better year than 2008, where the World Cup portfolio produced a startling 500% return on capital, on invested capital. So you may want to take a look at that if you're a member. If you're not a member, I highly encourage you to become a member. You have full access to this and to other portfolios as well. So moving along, we'll go to our next market. That is going to be the Eurodollar. I think the Eurodollar is pretty much done here on the downside. I think we're very close to making a turn. The reason I say that is because we have two green trade triangles right here. Only the daily is red, which means you should be out of the market. And if we put this in our daily, boom, you see right here on the top, that's pretty much where we got out, 133.19. That was a signal to exit this situation, because we remember we trade on dailies. So we had a nice trade from this level here, 32.32, up to this level here, 33.20, but on one full point. So the market's come back down, and we've got a much better level to buy at. Should we see a signal? I don't necessarily think we're going to see it today, but maybe the next couple of days. So watch this cross very, very carefully. I think it's really worth your time watching this market. So moving along to our next market, which is crude oil. We've changed now to the August contract. And you can see this market is beginning to find support. Very oversold, as we've said. Had a big move down. We were surprised at the move down, and we didn't expect to see it, as all our trade triangles were in fact green. But now we have two green trade triangles, one red trade triangle, indicating, you can see where that came in right there at 97.61. So we were out and made nice profits on this position, so I'm not too concerned about it. But we want to see if it turns back up again. And if it does, we want to obviously get back in. Ferry oversold, as I mentioned before, much like here and back here. So that's the key level to watch. You know, one thing I do every day is go to our trade triangles. If you're not familiar with them, you should become familiar with them because they really bring up some jewels in the market. So all you have to do is actually just click on this link right here, and you'll be presented with a page like this. Now, these are weekly trade triangles. So here's the equities, volume greater than 2 million, weekly trade triangles, and search today. That's all you have to put in. Or you can change this to monthly. It doesn't matter in this case because the stock that we really picked out today was this stock right here, and this is STEC. And there you go. All of the trade triangles are all positive, and as you can see, everything under below that is pretty much negative. The one key thing to look at in stocks is to look at the monthlies, which is this last column right here, and they're all green. So the longer term trend is still up, but the intermediate term trend is down, and all of that occurred today, which is not a good sign. Intel, Yum Brands, Visa, Apache, Best Buy, this all happened today. These are not good signs for the market itself. So let's clear the screen and go to our chart that we want to see on STEC, which is right here. Now, just to give you an idea, if you want, I tend to look at the monthlies because that's what really determines the trend, and I like to see volume over 2 million, so I search today. And there you have it. They're the Keynote Systems, STEC, and Vanguard Health. They're the only three that really kicked in. Now, all of the other ones right down here in the red are all negative. All of these stocks turned negative today. JetBlue Airways, Las Vegas Sands, Progressive, you name it, Transocean. All of these stocks turned negative today. So they're definitely to be avoided at all costs. So let's go to STEC, which is our second one down. It really doesn't make any difference in terms of you can sort them if you want to, but we're just going to click on here, the chart, a daily chart on STEC. Going back, we can go back, I think, probably 3 months, 4 months, 6 months. In this case, it's probably 6 months. Yeah, 6 months. We have a plus 100 score. There's the monthly kicked in really well. It looks as though the weekly kicked in as well at the same time. So here's what we want to look at, is what's driving the stock. It really doesn't matter. The perception is this stock, it wants to go higher. Remember, we talked about perception being an amazingly powerful thing in the markets. So let's scope this out to the max and just put a very simple monthly chart, and we'll just do a line chart. Just try to keep it simple. Move it up here. So the last signal we had at this level, now this signal came in today at 561. You can see the date 6/24. That's today, 561. And back here, we have to go all the way back to February of 2009. It came in at 569. And look what happened. It went from this level, 569, over $42 in basically 7 months. And that's a pretty amazing move. Can it do the same thing again? I don't know, but what if it went to, let's say, $12, $14? That's you're doubling your money in a relatively short period of time, which I think is not a bad thing given the fact that these markets are under tremendous pressure today. But that can change, as we well know. But this is a stock we like based on our trade triangle technology. All of our triangles are positive, indicating a trend. Can it go down tomorrow? Potentially, yes, of course it can. But the reality is the longer term, this market has made a turn, because the last signal we had on this is on December 21st, 2012. That's 18 months ago. Think about it. So this is an important element that just kicked in today. Hey, I'm Adam Hewison. Thanks for watching today. I'll be back later this week with some other updates and some special reports for you. Be sure to watch some of the reports we put online for you. And if you haven't downloaded my book, download the book. It's free. It's for an iPad. But if you have an Android or something else, we have a PDF version for you. So I'm Adam Hewison. I'll see you later. Have a good day. Thanks for watching this video. I hope you found it helpful.